Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter, and happy March, everyone. March 2nd, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, wow, what a week. The NASDAQ hit all-time highs as the tech sector took on new life right toward the end of the week. We got the end of the month, beginning of the new month bull market rally just as anticipated, and usually happens during a bull market. And our portfolios, well, they're all at all new time highs. So we're right there with the market, except we're about doubling the market, and in one area tripling the market, which we'll see. Now, our weekly stock analysis video, we go over a stock in the housing sector that is blowing away the competition. Installed building products is up over 100%, actually 105% in the past year, more than tripling the S&P 500 index. In our ETF video, the top stocks in the semiconductor ETF are more than tripling the S&P and outperforming the ETF itself by 8 times. That's just in 2 months, folks. What a great way to end the week. Now, some of you can't see the stocks that are in the ETFs that we talk about, and that's because you don't have the ETF subscription. So if you can't see the stocks, that's the reason. Those of you who do have the ETF subscription get to see all those stocks in all the ETFs that we talk about. So, okay, folks, let's get right on with the market. And here we are with the S&P 500, and we were up at the top, last week, about 6-7 days ago, trading days that is, and we got up above that top band. Now, when that happens, there's usually a pullback, and then we go back up to test that area, and that's exactly what happened. However, in between, we thought this market was going to come down and test this 20-day moving average. Didn't even get that far, folks. It was up, then a pullback, and then the end of the month rally, beginning of the next month rally in there, combined about 3 or 4 days. That was it. We were looking for a lower low in here, which we call the pit bull low, and that low wasn't very low at all. It did come down exactly to script, but we would like to have seen it come down a little bit more. So, and that would have given us a nice little trading signal in there, but it didn't happen. But what did happen was the market went back up to this top band again like it was supposed to, because right here last week this meant, and the end of the week before, this meant that the market was very strong. And down here our intermediate term indicator is flat, but what that means is it's not going down. So we had a pretty strong market. We're going to show you the volume here in a second. And in fact, here it is. This is the S&P 500. Now up here we had a divergence forming, and it was not a good divergence. It was a downward divergence, but all of a sudden, right at the end of the week, this market just took off and it surpassed this level. So that's a very good sign in there. So the reversion to the mean we were looking for, and this green line's the 20-day moving average. The reversion to the mean did not happen. Market dropped down a little bit. This was the pit bull low, if you want to call it a pit bull low. We're a little disappointed it didn't go a little lower there. And then all of a sudden, Thursday and Friday, it just took off. Now look at the volume down here. These vertical lines represent volume. Green lines represent the volume on the up days. And look how the volume picked up on Thursday and then again on Friday. So we have good volume, good market movement, and we have, this is the flat intermediate term indicator down here. Now look, it had broken down just a tad, but then came roaring back. And then when we look at the QQQs, down here, well, let's start up here. Up here, we got that divergence to the downside, and it went down, but not very much, folks. So we got that downside divergence. It happened, oh my gosh, hardly at all. And then all of a sudden, Thursday and Friday, it took right off. Again, green line, 20-day moving average. We're well above it, and we've got a really, really big push. We are at all new time highs on the NASDAQ and also the QQQs, I believe. believe. I have to go back and look. But if the NASDAQ set all new time highs, so are the QQQs. And here's that heavier volume. So you see the red lines down here, how the red lines representing the volume when the market is down, light volume on the downside, heavy volume, and this green line over here, heavy volume on the upside coming in toward the ends of the week. See, this scared us in here. See these red lines? That was heavy volume on the downside as the market broke through, and I'm talking about the QQQs, broke through to the downside and broke below that 20-day moving average. And that happened on heavy volume, which was very, very scary. Moved the intermediate term indicator down, no doubt about it. And then all of a sudden the reverse on Thursday and Friday. And look at that. We are now, the black line is now above that red line. Very nice. And portfolio protection, yeah, these puts are very, very cheap. And as we mentioned last week, we moved the May 17th put up to the 425 level. And that means as the market goes up, we're raising our, if you want to call them stops, but we're raising our insurance. And because it's so inexpensive, very, very nice, we're following that market up. So, folks, we had a tumultuous week this week, up and down, but we got that bull rally at the end of the month, at the end of February, and the beginning or the first trading day of March, which was Friday. So we had a good week. Take your mind off the market, get outside, get some fresh air, be with your loved ones, watch television, do whatever you want, get your mind off the market, and guess what? We'll see you back here Monday with more news and more market action. Stay safe, folks. We'll see you on Monday.